Why is relying on historical investment data risky? Have you ever thought about how past performance can shape our future decisions? It might seem logical to trust historical investment data, but that can be misleading. Let's break down why relying solely on this data can be risky for your financial journey. First, past performance does not guarantee future results. Markets are constantly changing due to new technologies, regulations, and geopolitical events. These shifts can create new dynamics that historical data simply cannot capture. For instance, what worked well in the past may not work today. One specific risk is known as survivorship bias. This occurs when historical data focuses only on companies or funds that have survived. It often ignores those that failed. By excluding unsuccessful entities, the data can overstate returns and underestimate risks. This can lead to a false sense of security when making investment choices. Another factor is the changing market dynamics. The investment environment evolves over time. For example, shifts in global trade or monetary policy can alter risk and return profiles in ways that historical data cannot predict. What was once a winning strategy may no longer be effective. Additionally, the quality of historical data can be a concern. Data may contain inaccuracies or gaps that can lead to misleading conclusions about risk and return. If the data is flawed, your investment decisions based on it could also be flawed. Investors may also fall into the trap of overfitting to past patterns. This means they might base decisions on patterns that are mere coincidences rather than meaningful trends. This can lead to poor investment choices that do not align with current market realities. From a biblical finance perspective, these risks highlight the importance of wise stewardship. Scripture encourages us to plan prudently and warns against placing confidence in uncertain riches. While historical data can provide some context, it should not be the only factor in your financial decisions. Practical applications include using historical data as just one input among many. Consider current market analysis, economic conditions, and your personal financial goals. Recognize the limits of prediction and maintain a diversified portfolio to manage unforeseen risks. Seeking guidance beyond data is also wise. Prayerful consideration and counsel from trusted advisors can help align your investment choices with biblical principles of stewardship and trust in God's provision. In summary, while historical investment data can offer some insights, relying on it exclusively can expose you to significant risks. By combining data with thoughtful decision-making, you can support a more balanced and responsible approach to investing.